So the huge news is the jobs came out extra strong, extra good, which is bad, right? What is it, 256,000 jobs, expectation 164. So that's super duper good, right? And unemployment fell to, I don't know, down a percent. Anyway, the overall takeaway is that the labor market is strong, which means in the good news of the labor market, that good old Fed pivot down and the rates decreasing may be held off longer. We may not even get that in 2025 because they said they're only going to do 2. So now with that, now is it Christmas jobs? They don't tell you. And of course, these things get fudged within a couple weeks anyway. But even if they're fudged to the upside, that's like a massive over of on the over and under. 256 over 164. It's pretty crazy. And so the markets, I thought that was going to come out at 8:30. Actually, it came out. Maybe it just came out. I'm not sure. But yeah, you can see the market is reacting to it as we speak. We were coming up to our channel of eternal monotony's resistance. We didn't get it. We hit the 20 moving average and kaboom! All the way back down to test the channel monotony support. This is what we do in a chop suey market. Now, a big takeaway to this and why I always preach this ad nauseum, the reason why I'm not a pro trader is that I didn't know what the jobs were, right? The announcement, I didn't know. So if you are a professional trader, you know what that announcement is before it comes out. You just have people, you have insiders, that's why you're a pro. Now, everyone else, you go, I just have to ask yourself this when you think you're a pro trader, if and when you do I know what the announcements are? And if you don't, you're not a pro trader. So, and that's where they wreck, because a lot of these times, who is texting me? A lot of these, damn it, that text threw me off. I got to get this watch off. Why does this stupid watch? Like I need something else in my life giving me notifications about what the hell's going on or what I don't even care about anyway. Jesus. So yeah, so we see the reaction coming down to the support of 92. Now, there's even worse news, really, when you think about it. We got the 3 dead soldiers on the daily. 3 red candles in a row. And when it comes off, like, this is one of the worst. Well, that's not the worst, actually. Wick's wife. Can you believe the audacity of someone texting me during the live? Here's where I give them a pass. They don't know I'm doing this. No one in my life knows or cares that I'm actually doing this thing right now. So I'll text Matt. He's probably sleeping for all they know. Anyway, the fact that this is such a reversal candle, it's a bearish engulfing candle from a lower high to insult to injury. Boom, boom. This is a lower high. Just saying that we don't have enough power as we did here to get back to 102. Then we have a reversal candle and we put in 3 dead soldiers. 3 DRD farmer. It was me. 3 dead soldiers in a row on the daily chart. It's not good. It's not good because what it tells me is that we can expect. So this is where we were before the announcements came up. We had rallied back. We were almost about to put in a bullish engulfing candle, which would be a nice little bottom sign reversal, right? But the fundamental came out negatory, and it's kind of sent us down. So this is what my takeaway from 3 dead soldiers. And again, I'm not a pro trader, so all this is just my takeaway. It usually signifies that we will get a local bottom, but we will ultimately put in a lower low, right? So if we go back to these 3 dead soldiers, it's hard to say dead soldiers, 3 dead soldiers. We put in this last time we saw it. We did have a rally up. It ran out of steam, and we put in a lower low. Now, what I would expect from a chart like this is that we have a little bit of rally, maybe with this news here, it's hard to say. It's hard to say what'll happen today. Of course, I don't know, obviously, but let's say we do have a little bit of a rally into the weekend and we come up to a 97. You know, it would be that old-fashioned bull trap that we love to talk about. You know, the old bull trap. like there's traps out there, right? Psychologically, it's a bull trap. You know, people get a little bullish, so to speak. I would expect to get rejected from this support line or resistance line, sorry. And we'd probably candlestick this wick. Oh, you can't see it. There it is. Candlestick this wick here at 88.8. Now, I've been going... If there's one takeaway from this channel, if I start going off about something ad nauseum, week over week, you know, the same BS, it's because the data comes back all the time. I'm just regurgitating the number that keeps coming up, right? I don't care if it hits 88.8, nor do I want it. I'm out of the market for the bull run. My bags are packed, right? I'm not sitting there with dry powder. I took all my bottles back. Right, I took all the bottles I had in my garage, my pick-a-pop bottles, you know, red cherry, root beer. I took them all back. And so my bags are packed. So whether it goes down here, I don't care. It doesn't matter to me. We are in, you know, the bull run, allegedly. So this is what I would expect is three dead soldiers. A little bit of a rally back up, a rejection. Let's draw it in for posterity's sake. Is that how they... So we see a little bit of a rally. We get rejected, and then we come back down to this. And then we're off to the moon. You know, that could take us maybe into next week where we have a run-up into January 20th. But this is what these dead soldiers tend to do. We have a reaction, just basically a time divergence. And I spoke about my bearish time divergence on Tuesday, right before the market tanked, right? That's me pumping my own technical analysis tires. I was speaking about and I made it up, bearish time divergence, but it is something, you know, when you have this onslaught. So the bearish time divergence was right here. We had all this run up, but for the amount of time it took to run up, 1, 2, 3, 4, 5, that's 7 green candles in a row, right? So where I come up with this bearish time divergence thing, I mean, it didn't exist until I brought it up on Tuesday, is that it was a 10% dip over 10% gain over 7 days. Now in the legacy TARDFI markets, that'd be huge. Oh my God, 10% in 7 days. Hasn't gone up 10% in a year, right? But not in crypto. So this is the bearish time divergence. It's mean we've been going up, but we can't get the buy-in from the bulls, you know, like with all this run up, we still didn't get a buy-in. The buy-in started here and then immediately got rejected by the bears. So we failed to get the buy-in on this bearish time divergence. Now we can see we get a bullish time divergence. The longer we're going down, there's just the market kind of, it almost soothes itself with a green day, even though we are in a downward trend. It just happens. So that's why I'm thinking we might get this pull up here and then 3 dead shoulders. It's tough to say. Try it, Wick's wife. 3 dead soldiers, 3 dead soldiers, 3 dead soldiers. Of course, when I'm making a point, I can say it flawlessly. But when I'm in the midst of a rant, it comes out shoulders, unfortunately. And so that's what I don't like about the ding dong and the daily chart. Here's the 3 dead soldiers. I go on and on and on about it. To me, it's the only real relevant thing. Who's texting me? This stupid phone am I doing? I don't need. See, I get it for the sleep thing. Like I want to test out sleep and health, and when I play squash, how many blah 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 footsteps I'm taking. But I can't handle all these notifications, especially when I'm on a live stream here. God, Dad, do they even know I'm doing this? Answer is no. Where was I now? Yeah, the daily chart. The only real significance I ever find on a daily chart is when we see 3 red candles in a row. Otherwise, it's kind of caught in between, you know, a 60-40 of can't really tell what to do unless you zoom out, right? So I like the 4-hour chart to give me like the initial what's the sentiment of the market, where's the action. Daily kind of rounds it out. To me, the daily chart is more like a moving average chart. It kind of rounds it out. It's not that great. And then we go out on the old Wookie here. This is, so this on Wednesday, on Sunday, we don't want to close below 93.4 because that would put in a bearish engulfing candle. Ideally, we want to close green at 98.2. Now, with the sentiment in the market, it feels like we're not going to do that. I got to take Duke to the dentist. That's what it was. It was a time-sensitive notification, dentist, Duke, 9 a.m. Wow, Apple did something for me. Although this whole thing's created with Apple. The green candle, 98.2, would put us in a recovery mode. However, we continued a bearish prowess. We will close at 93.5. It'll be a bearish engulfing candle, and that's no good. It's no good in this situation. Now, we do have the run up to January 20th. I feel it may be a nothing burger, as these things have played out as nothing burgers. But the real takeaway, if you're going to take away anything besides my hatred for my new Apple Watch, is it's not even new. It's like a hand-me-down. We want to close green on Sunday. That's it. So what is that percentage of gain from here to close green? Someone's texting me again. This stupid watch is let's call it 5%. We need to make a 5% pump somewhere between now and Sunday. It's not crazy. Not the craziest amount of gains, 5%. Randy Hipper, like and sub. Thanks for tuning in, Randy. This stream will take you to Randy's. I may actually cut it early just because to get Duke to the dentist. He's got a cavity, which in a weird way, I think it's a good thing because you have a annoying strict dada. He's like I heard him saying, "Why are dada so strict?" Me telling him, it's like, you got to stop eating sugar. Just because you see other people eating sugar, like people in your other family, doesn't mean it's okay. It's going to have bad consequences. So try to limit your sugar intake. And then he got a cavity, right? So maybe it'll be deterrent. I don't know. Did it deter me? Not really. I got cavities, kept on chomping candy. Nothing really stops. Candy is sugar is the meth for the kids. Once they're on it, it's hard to get off. Now the other meth is video games. But my new theory on video games is I'm gonna let exposure therapy take care of it. Because if he has any DNA from me, I always kill what I love the most. I get to the bottom of things, and even things that I enjoy, I will do it till I get to the bottom of it. And then once I get to the bottom of it, it's dead to me. So maybe he will, through exposure therapy. But I gotta see. I'm going off a tangent here, but I got him these green headphones with a Roger that, copy. This is Avion 10.6 requesting flyby, like one of those pilot microphones, so he can play with his cousin when he's playing his thing, and he looks so cute. It's like. I got to set up a gaming streaming thing for him. So if he's going to be doing this, he might as well be making content. You know what I mean? Like instead of just sitting there into the ether oblivious, maybe he can start getting to know YouTube. And he does make videos and stuff like that, but he's not motivated. And why would anyone really be motivated at that age to make videos? Or why would any be motivated to make videos at this age? But maybe if he starts early, he can. It's just better, if he's going to be doing something, he might as well kill a couple birds with two stones. Yes, Black Hat Team, the piano show is tonight. It's at 9:30. It's going to be an interesting one because there's lots of resos on Saturday, not so many resos on Friday, which is good because I like being able to pander to. Pander's not the right word, but let the boutique community dictate the songs. Rather than the people dancing in the you take my nerves and you rattle my. What the hell's that song? Goodness gracious, great balls of fire. Yeah. Instead of having to play that for the millionth time, we can go a little bit more deep and weird into what the boutique community requests. This is interesting. So I'd like to leave you with a little bit of hopium. Crypto headed for banana singularity, where everything goes up. ... Analyst. Real Vision CEO Raoul Paul says the next phase will be an altcoin season when everything goes up, followed by a bigger consolidation. This is where I differ with that. I don't think we'll see this massive run up in consolidation. You know, if anything goes up and comes down again. Anyway, Crypto Mark's in the banana zone and heading into a banana singularity, or a period where everything goes up. Genius take. According to Real Vision co-founder and CEO of Raoul Paul, the banana zone is a term coined by Powell to describe a period of significant upward price movement. Interesting, significant. I see where he gets the banana zone out of that. Yes, we are still in the banana zone, macro investor Raoul Paul said on X on January 10th, before adding that the first phase of the bull market was the breakout in November. Yeah, one might argue that the banana zone was, right here. And then we consolidated. One may argue. And I guess what he's saying is that maybe this will go up and then we'll consolidate here. Now, there are no guarantees on how fast price goes up or if price goes up at all, right? There's no guarantees. It's not, we're not guaranteed anything. And with the amount of negative fundamentia coming in and coming on board, I get excited because I'm a contrarian, and it's just, life is easy if you do the exact opposite of what the lamestream tard-fi media or financial system says. So if they're bearish, well, it's easy to be bullish because they're all reactive too, right? They're just like teleprompter anchorman readers. They don't make anything. They don't analyze anything. They got scripts. They read it. They don't really know. They get used to the jargon and the rhetoric, and they can kind of speak the language, but they don't know. They do what they're told. For Christ's sake, they have no mind of their own. Now I'm getting a little negative. Sorry about that. Yeah, this is the monthly chart anyway. So we talked about this yesterday. 23.6% fib down at 90K. Yeah, that's where I see this 3 dead soldier pattern playing out, is around this 90 to 88.8. Ideally, I would like to crack a candle close at 88.8. Just to me, that would say that the market has exorcised its demons, so to speak. Who's texting me? God damn it, on this one. I'm going to have to take this watch off, I think, moving forward for these streams. I don't need notifications on anything. I can't turn it off, too. I thought I went in there. I said, slid all notifications off. Didn't do anything. And so on this monthly chart, this does look like it's toppy. I'm not going to lie. It's toppy. These are lots of bearish wicks. It's toppy. There's no ifs, ands, and about it. So what I was saying is that we're not guaranteed. I think we're guaranteed some play out to 126. This is under normal market conditions. Let's say that the day one rhetoric gets completely obliterated and nothing he says or he said, oh, look at this one, push back. We're recovering, it looks like. Pianomattyb, OG. Uh-oh. I ran out of space here. It went too fast. Gifted 5 Pianomattyb memberships. A 5 for Friday. Thank you for keeping the lights on this one-man show. It's like 1 man and a half, actually, because there's Duck who comes out. Thank you, Trevor, very much. Appreciate that. So yeah, we had a little dipsy doodle, and everyone got scared. Not everyone, just the bots, right? The bots. Oh my God, what the hell's happening? Let's sell. Oh no, we rebounded. Let's buy. So until we have, that's another reason why it's like when asked about trading, when you do the time, see, I'm so infatuated with time, because of my time in ayahuascaville in Peru. I break down everything into time increments. And when I think about the movement of a market over a year, it barely moves, really. I mean, there's certain days. What is it? 10 days a year? 10. Let's get a little excited, a little overexcited, and say 15 days. 15 days a year, and of that, you have, let's call it 1.2 a month. 1.2 a month of actual moves. Now, this is why you have leverage, because people don't have any moves, so they're just kind of scalping. And to a certain degree, they're okay scalping support and resistance until that move comes. And that move is usually like the washout, where people kind of get washed out. But so I think moving forward, I'm looking forward, I'm such a macro 30,000 view. Like the reason why this channel is important to me as an investor is that it allows me to see the macro trends. Where are we in the cycle? And because of this channel, carrying forward, if we get into the bear market in a year and a half, I will know when it's time to start putting blood fiat money back into the market. I will kind of have an understanding of where the bottom is. Now, no one really knows, but we get a general gist. And I don't care if I'm off by a month or 2 months. It doesn't matter, because, the market takes off. Like in 2022, when I hit 16K, anyone who started putting money in there, it went down a bit. I think maybe $1,000. Who cares? $1,000. But it just started going up forever. So if you started getting your money in there, you would time the market well. No one can really time bottoms or tops. A lot of people claim they do, but it's just rough. Especially I find tops are harder than bottoms, because there's more regret with selling too early than buying, when the price is going up. Because it's the concept of leaving money on the table. Oh, had I not sold, I would have, made 80,000. That's all assuming that you got out 80,000 higher, right? We're just throwing around terms like 80K. I wish I would have made $80,000 more. But you know what I mean? The aspect of trading for me has always been a long macro game, and that's why I maintain this channel. So moving forward in the bear market, we all know I let you know when I made my 16K and my 26K buys. And I'll let you know in the future when I make my 175K. Maybe that's the bottom, right? We'll know. Maybe 500K is the bottom. Who knows? Maybe 70K is the bottom. And in that case, if say the bear market went into 70K, I would assume most people would stop making content just due to no one watching videos anymore, because it would take the lust and the excitement out of the crypto market, I think. So we have to see these prices go way up in order to get the same amount of social sentiment as we got in 2020 and 2021. God, I hope I see everyone at the piano bar tonight.
Make sure you like and subscribe and share this video with someone